9 a.m. So I'm just gonna put all this stuff here again. Supply and demand strategy. So for this strategy, I'll mainly use it on the 1 hour time frame. I know there's a lot of people that actually use this strategy on a lower time frame, like the 5 minute, the 15 minute, stuff like that. But for me personally, just from back testing in my experience, like the 1 hour, I don't know, it gives like the most push. Like for some reason, like I feel like for the 5 and 15 minute, you can find like precise sniper entries type of vibe, but like I'm okay with risking a little bit more to go ahead and increase my win percentage. Like I've tried 5 minute, I've tried 15 minute, and I lose more often than not on those time frames than actually just trading with the hour. Because I feel like with the hour time frame, especially for gold and Nasdaq, like as you can see, it trends a lot. So you can see it's just trending right now, making these moves up, so on and so forth. So basically, that's basically what I'm doing. All I'm looking for is 1-to-1 risk to reward. So let's say if I want to make $500 a day, I'm risking $500 to make $500. There are some trades that can go to risk to reward 1-to-2, 1-to-3. But my main thing is that I just want to get my money and be gone, man. You don't want to be in these trades for too long. For the simple fact that, bro, you gotta take what the market gives you, alright? So 1-to-1 risk to reward. First step, identify trend. So I identify the trend. Oh my god. My fault. Identify the trend slash market structure. So market structure is basically and most likely the most important thing that you need to know when it comes to trading. So what is market structure? So as you can see right here, you can see the market is moves in waves. So essentially, what does waves mean? So it essentially moves higher high, higher low, lower low, lower high. All right. So I'm just going to show you guys an example of an uptrend. So as you see, the market will basically make an extension, and now the market won't just keep going up forever. If that's the case, everybody will essentially be rich. It's not realistic. And think about it. If that was the case, everybody would be trading and everybody would be rich. You get what I'm saying? So that's not essentially the case. So after you see a move or push up or push down, vice versa, you always expect a move back. Right? So you always expect another move back, which is, in other words, a pullback or retracement, which then will allow the market to make the next move up above like that. So if you can see, all right, so the market made a low. Market made a low. Then it made a high. And then now, when the market decided to pull back, it did not break past this low, right? That recent low that it made, it did not break past it, right? It stopped and it decided to continue up. So now this is basically a lower high. So now this is a higher high for the simple fact that it went above this one right here. So that is essentially how the market moves and vice versa. So it's the same thing for sales. So if we're going down, We pull back. Same exact thing as this. So essentially what you want to look. So even if you look at this chart right here, you'll be able to kind of essentially determine what the market is doing, even if you just look at it. Because you can see it's making highs, lows, highs, lows, highs, lows. So you can see what it's doing. So essentially we can go up here, or we could probably come back down to fill in these gaps. But what I learned with this, it's all about being patient. So every day you don't have to find a setup, enter a trade, whatever the case may be. But with this strategy, more than likely than not, you will find a trade, whether it's on gold or whether it's on NAS. Okay, so now also for this strategy, I only traded at 9 a.m., which is basically the New York Open, 9 a.m. Eastern time. See, I only trade this at 9 a.m. Eastern Standard Time, which is the New York Open. So I used to trade at a variety of different times of day. So you can see Tokyo session, London session. I used to trade at those times. But it actually used to mess up my sleep, bro. So like I just stopped and I just try to stick to a strategy that just allows me to have a routine and wake up every morning, bro, and do the same exact thing, have the same exact routine, whether I win or lose. All right, so the first step, you want to identify the trend market structure. So right now, to me, it looks like the market is going bullish, which means going up. But the thing is, like I said before, we do have this gap. So like it doesn't have to fill in this gap today, tomorrow, but it's important to, see that. Because basically what can happen, what I'm looking at, what can happen with this right now, with this, so you can see it's going up, going up, going up, boom, boom, boom. So what can happen is it can go like this and then try to go something like that. But yeah, so we want to identify the trend. Next thing, supply and demand zone. Supply. Supply/demand zone. So we want to mark them up. So what is a supply/demand zone? So a supply/demand zone is, let me show you guys this. So supply plus demand zone is, let's say, since you got this buy right here, this bullish. Let's say, all right, the market is going up, as you can see right here. And I'm going to turn this, red. Okay. Let's say the market is bullish. And then it starts going up. And it starts going up. And I'm going to turn these green. All right. So now, let's say, all right, the market starts going up, as we can see right now. Kind of like what it's doing right here. It's going up. But now, basically, what we want to do is we want to mark up our supply zone. All right, so now for buys, no, actually demand. For buys, look for demand zones. For sells, look for supply. All right, so For buys, we want to look for demand. So for demand zone, we want to look at that most recent bearish candle, which is red candle, before the market made its extension. So this red candle right here would essentially be the demand zone. Okay, so now, all right, we have our demand zone marked up. The next thing we want to do is we want to wait for the price, basically the market, to come back into our zone, come back and touch our zone. Right, boom, one. All right, so now we're gonna turn these red. Right. Okay, so now you can see we want it to come back and touch our zone. So now the next step we want to do is wait for break of recent candle to enter. All right. So we want to wait. So we want to wait for a break of the of the recent candle. So as you can see, all right, cool. We left this bearish candle, then the market pushed up. Now, as you can see right here, boom, pushed up. Same example, pushed up. So now what happened? The market needs to breathe and come back. So as you can see, the market's coming back to make the lower high. But where is it coming into? It's coming into the demand zone. All right, demand zone. So this is like how you can kind of like snipe the bottom of a trend. So this also leads me to saying that this strategy works best in trending markets. Works best in trending markets. All right, so now wait for the break of the candle. So what is the break of the candle? All right, so now let's say it taps our zone. Okay, it respects it. Then now it starts to head back up. So now it starts to head back up. But now on its way up, it breaks, as you can see, breaks of the recent candle, right? Which is this bearish candle. It breaks it. So what will happen? I will enter either a buy stop. I usually enter buy stops. Or you could enter it manually. And then my stop loss will be right under. And then as you can see, risk to reward, we're going to straight one-on-one. One-on-one risk to reward. Boom. One-on-one, as you can see, risk to reward ratio. So if you guys don't know what this is TradingView, where you can actually practice and not where you actually enter the trades. Where I trade is my broker is Genesis FX. And you basically connect it to a platform called Trade Locker. All right, so now as you can see, boom, we had this extension, this pullback. Then now what are we expecting? Another extension up, right? So on and so forth to make that new high. So like I said, for generally we want to aim for a one-on-one, but there are times where we go to 1-2s, 1-3s. But for me, I just take my one-on-ones and I'm cool. And more often than not, sometimes your stop loss on one trade may be bigger than the last trade, so on and so forth. But that's why it's important to have a set amount of what you're trying to make per day. Have a set amount of what you Oh my god, why is it doing what you're trying to make per day. So basically, for example, so low key, a lot of people see trading as like gambling, as like, whatever guessing, whatever the case may be. And I would say it's more so like probability. And when I mean like probability is that the main goal is to win more than you lose. Main goal, win more than lose. Because you're not going to win, not going to win every trade. So literally this strategy last month helped me take 500 to about like 7,000. And that's just me just literally having a plan of doing $500 a day. So like when it comes to trading, $500 a day might not seem like a lot because it's like the rewards that you can make when it comes to trading is like unlimited. So like you can make thousands in a day, but it's like, think about it. I could make $500 in a day or a day from my computer, from my phone. So it's like all about just training your mindset and treating it like a job. So basically what I do is I treat trading like a job. So think about it. At a regular job, or whatever the case may be, whatever you do, even if you're in a career, whether you're a doctor, lawyer, whatever the case may be, there's going to be a certain amount of money that you make per day at your job. So like, let's say I work at the supermarket, whatever the case may be, and I make $200 a day, right? If I come to the charts and treat the same exact thing and treat it the same exact way, it's like, all right, if I can make $200 a day, then I'll be able to meet my wage. So now instead of me actually having to go in and work, now I can basically just learn and do this from home. So this is basically how professionals think. So it's all about numbers. So there's about 20 trading days, about 20 trading days in a month. So there's 20 trading days in a month, right? And for those of you who don't know, I'm actually a finance major, so this made sense to me once I broke down all these numbers. So it's about 20 trading days in a month, right? So if you make $500 a day, right? If I make $500 a day trading, $500 a day times 20 days, 20 trading days equals what? 10K. So literally, all you need $500 to $1,000 a day to basically, I ain't gonna lie, change your life, bro. Realistically. All right. So this is just like, a little general idea, you know what I'm saying, of the strategy that I do. Like I said, I enter off the 1 hour. Some days you might not have a setup, but most days you will. Risk to reward. It's just important things and these are just things that I've learned throughout my whole entire journey, man. I've lost thousands, I've made thousands. Just gotta keep going, all right?